topic is social cost and benefits. Why do we even have to talk about cost? Cost, we talked about demand, we talked about supply. But as an individual, or as a government, or as a firm, whatever we do has a cost, and whatever we do has a benefit. So, whatever we are putting our investment on, whatever we are trying to make up with, is going to have a cost and it's going to have a gain. So those costs will come, and the benefits will come also. So let's see what social costs and social benefits are. So when we talk about social costs, we say these are costs that affect the society. The word social implies the society. So it doesn't mean me alone, it's everyone in the society. So that is why we call it social cost. So social cost is the cost of the society. So how does the cost of the society come together? So there's going to be a cost for me, a cost for you, and a cost for those that doesn't have anything to do with what we do. So the cost for me, the cost for you, is what we call the private cost. And the cost on those that doesn't have anything to do with us is what we call external cost. So the combination of my cost and the cost that affect those one that doesn't have anything to do with us is what we call social cost. Do you get social cost here?
Yeah.
So social cost is the cost of the society. So we can't have social cost without having the private and the external. Whatever we are producing, we are not producing it for ourselves. We are producing it for the society. So there's going to be those individuals who are going to buy what we are producing. It becomes a cost for them. But before we could produce, we have our own costs too. The cost at which we are able to produce. That's a private cost.
Yes, sir.
We don't need to tell anyone about that.
Uh-huh.
Do you understand here?
Yeah.
This cost affects us directly. So look at private cost here. I said what? Private cost, this is the cost as a result of what? The action or inaction of firms that affects them directly. So your action or inaction that affects what you do is your own private thing, which we call private cost. So action means that you've taken a decision to do something, or you've taken a decision not to do. So the cost of you not doing and the cost of you doing is what we call private cost. Because when you do, it affects you privately or directly. And when you don't do, it affects you directly. That's what we call private cost. Do we understand private cost here? Then we talk about, okay, now examples of private cost. Cost of raw materials. The amount paid in ensuring that resources needed for productions are available. So, as a firm, you need to produce. How do you produce? Production doesn't come from heaven. You need to invest on production. So for the fact that you are investing on production, you are making a cost. You are incurring a cost. So before you could provide this marker, there are raw materials needed for this marker. So the amount you pay in ensuring that you could have the raw materials needed for these markers is what we call raw material cost. Do you understand cost of raw material here? Consumers are not going to pay for that. You that own the firm, you that want to produce this marker, will provide and pay for that. It's your own cost. That is why it's a private cost. Do you understand cost of raw materials here? The second one, cost of labor. This is the expenses incurred on workers due to their engagement. Example given, salaries or wages. A firm will definitely have workers, right, that will work for you. So if you have a firm, those that work for you, you have to pay them. I am not going to pay for you. You have to pay for your workers. So this is a cost you incur directly because you are producing something. You are producing a good or a service. So it's still what? A private cost. Are we getting what private cost is now? Cost that affects you directly. It does not involve third person. It is you. Because you are incurring it. Because it's your own engagement. So when you have workers in your organization, you pay for them. You pay their wages or salaries. It's a private cost. Do we get private cost here? Another example of private cost. The third one, cost of overheads. This is the day-to-day expenses of firms. As a firm, every now and then, for every day that passes by, you have expenses to incur. You have expenses to pay for. You have bills to settle. So maybe you have to pay for stamps, maybe you have to pay for delivery, maybe you have to pay for transportation. These costs, they are what? Overhead costs. They are office expenses. Do we understand? So these office expenses will come. Cost for expenses on photocopying, expenses on books, expenses on whatever it is. They are expenses that you have to pay for. The owner of the school pays for these expenses, not the students, not the teachers. It affects the owner of the school. So they are the expenses that the owner of the school uses to run the school daily. Do we understand overhead expenses here? So they are what? Office expenses, which has to be paid by the owner of the premises or the owner of the firm or the owner of the business. So is it a private or external?
It's private.
Do you understand private now?
Yes,
So private costs are costs that affect us based on our action or inaction. So whatever I do as the owner of my business, whatever I do or whatever I don't do that affects me directly is a private cost. Do we understand private cost here?
Yeah.
Any question about private cost?
No.
So okay, I said okay, yeah. Now we have external cost. What's an external cost? Private, the opposite of private is external here. So what is an external cost? The action or inaction that we decide as individuals, that firms decide, or that government decides, that affect third party is an external cost. So whatever decision you take as a firm, whatever decision you take as an individual, whatever decision the government of this country takes that affects other people that are not supposed to be involved is an external cost. Do you understand the external cost here? So the action or inaction of firms, of individuals or governments that affect third party. Why are they third party? They are third party because they are not part of that decision. They are not part of whatever the situation is. But directly or indirectly, it's going to affect them. Do you understand external cost here?
Yes, sir.
So, examples of external cost, they said, may cause unemployment. May cause unemployment. See, may cause unemployment means certain decisions that have been taken that has affected employment. Do you get the logic here? Certain decisions that they have taken certain decision which is not voluntary, but now it has affected employment opportunity. Example, I said, what's the example? I said, firms may use up resources as a result, could stop production. As a result, could stop production, which could lead to workers' disengagement. Maybe in this industry, maybe we produce certain things, but the resources we use in producing these things finished. Why can't we conserve them? Why did we finish all these resources? Why did we use them up? But because we've used them up, it's a decision we've taken as a firm, we can't produce further, then the workers can go because they don't have job anymore. Do you see that it is an action of a firm that has caused us to lose jobs? Do we understand external here?
Yes, sir.
So when jobs are lost, it is an external cause because it's going to affect other people that are not involved in the decision taken.
Okay.
The decision they took or the decision they made was their own decision, but now has affected employment opportunity. The company or the firm is going to shut down. And when the firm shuts down, no employment. And why is the firm shutting down? The firm is shutting down because it doesn't have resources to use for production. Why isn't it having resources to use? It's used them off. That means all the resources they have has been done. It's finished. So why can't they decide not to finish all these resources? But they've taken the decision to finish it up. Now they don't have anything, then the shop is closed. That's an external cost. Do we understand external cost here?
Yes, sir.
Pollution. We all know what pollution is, right? Okay? So firms having factories which allows emission of carbon monoxide into the air will not only affect those working in the factory, but also those within the area they are situated. So whatever, maybe we have firms around us or industries or factories, they emit carbon monoxide. So when they emit carbon monoxide, it does not only affect those in the factory, it affects everyone around.
Yeah.
So it's an external cost because it does not only affect those in the factory, it affects we that doesn't work in the factory, we that doesn't have any gain with the factory. Example is also a school. A school could be an external cost. When the noise in this class is affecting those around us, they are not listening, they are not part of this school. But your pollution, your air pollution or the noise you're making affects them. Do we understand external here? So there's not going to be, when you check on external and private costs, it comes together to give us social cost. So the cost you have incurred as a school is your own cost, bringing up this school. But the cost, those that are not in this school are incurring because the school is here, is an external cost. So when you bring up these resources, these costs together, we have what? Social cost. Do we get it? That's why social cost is what? Private cost plus external cost. Do we understand social cost here? Do we understand private cost? What about external? So external cost is the cost that affects the society, or the third party. Who are those third parties? Those that are not involved in that production. Those that are not involved in the process of you making that decision. So the action or inaction that has made us to have a cost on third party is an external cost. The action or inaction that we have taken that affects our production directly or indirectly is our private cost. Is it clear?
Yes, sir.
Then we have benefits. So, social benefit. What is social benefit? I said what? These are the gains of the society as a result of the action or inaction of individuals, firms, or governments. So, benefit comes now when the action of individuals, when the actions of government, when the actions of firms, or their inaction causes what? A positive impact, or has caused what? A positive effect in the society, has caused a gain. So when the action we take as a school has a positive impact in the third party, then we talk about external. But the action of this school has caused the school to make a lot of gain is a private benefit. Because that gain comes to the school, not to the third party. So the gain because of your own action or inaction is a private benefit. Your gain because of your action or inaction is a private benefit. The gain of the third party based on your own action or inaction is external benefits. The combination of the external and private benefit gives us what? Social benefits, which is the benefit of the society. Do we get it? So, external benefit, I said, this is the action or inaction of individuals, firms, or government that has a positive impact on third party, like I explained earlier. Then, what are the examples of private benefit and external benefits? Look at the examples now. The private benefit, I said, revenue earned from providing goods and services. As an individual or as a firm, you are providing goods or you are providing services. The revenue is the money you make. The money that comes to you, you don't give it out. It's yours. So it's a private benefit. Because you have decided to have the firm. You have decided to have the company. You have decided to take that action. So because you've taken that action, the revenue you made from providing this service is a private benefit. Do we understand private benefits here? Does it look private here? It looks private, right?
Yeah.
Because you are providing the service, or you're selling the good product. Then the money you made from selling the product, it's yours. It's private. Do we get private benefits here? Another example is savings from relocation. This implies the firm could gain from changing its location. I could choose to leave this area to go to another area. And because of me doing that, it saved me cost, it saved me some amount of money in rent. So the amount of money that it saves in rent becomes mine. It's a private benefit. Do you understand private benefit here? Because you have relocated, because you've changed your environment, the cost at which you pay reduces. It's a private benefit. Is it clear?
Yes, sir.
The third one, savings from investment made on fixed assets. What are fixed assets? Long-term assets. Assets that can be with you for almost forever. You can use it for more than a year or so. These are long-term assets. So when you invest on these things, in the short run they are expensive, but in the long run you gain from them because you won't buy them again the next time. You might not buy them again for the next 20 years. Do you understand here? So the gain you make from investing on assets is a private benefit. Examples of assets, we talk about land. When you buy the land now, if you want to sell it in the next 10 years, the amount should be multiplied by 10. It appreciates. And when you are selling it, is it for a third party or for you?
For you.
Do you understand? So it becomes what? A private benefit. So you have taken a decision to buy a land, you have taken a decision to buy some machinery that you can use in the future. So it's an investment. So the return on your investment is a private benefit. Is it clear?
Yes, sir.
So let's check on external benefits. We said external benefit is what? The action or inaction that has made a positive impact to third party. Your own decision or your indecision that has affected the third party positively is an external benefit. Look at the first one, creating new jobs. How do we create new jobs? That means a firm out there has started operation. That means a company has been created. A job, when a company has been created, a job has been created. So when you have a firm, when you have a new firm, you're not going to work there, you're going to employ people to work there. So your action of having a firm or your action of having a company has affected the third party, because the third party are going to get a job in your firm that you have established. Is it private or external?
It's external.
So creating a job, do you think creating a job can be private?
No.
Because job is for everyone. But someone out there has taken a decision to create the job. Do we understand here?
Yes, sir.
So rise in government tax revenue. Revenue are the money that government makes. Government makes this money. Government has decided to increase tax. And firms, businesses, companies, individuals, they pay tax. When they pay tax, government doesn't take the money into their pockets. Government uses the money back to the society to create schools, to create roads, to create infrastructures, to build things. These things are for third parties, not for government. Do we get it here? So the action of government that they have taken to create what? To increase taxation has brought in tax revenue, which will be used for the society or for the third party. So it's not only government that's going to enjoy the road, but everyone in the society will enjoy the road. Do we understand here? So combination of this and this gives us this. So you have a benefit because you have created a firm, or you have established a firm by making profits. But the consumers are going to buy your product. And when they buy your product, they enjoy using your product. It becomes an external benefit for them. And you are going to pay tax. And because of you paying tax, it becomes a private benefit for government. But the tax is going to be used for third party, which becomes an external benefit to third party. Do we understand how it works here? So social cost is what? The cost of the society, which combines the private cost and the external cost. While social benefit is what? The benefit of the society, which comprises what? The private benefit and the social and the external benefit. So that's why private external gives us social cost in cost. Private external gives us benefits in social benefits. Any question about this? Clear?